Okay. Good morning, everyone. I hope everyone is doing fine. I'm Grace. I'll be the host for today's event. A very warm welcome to our MQdemy MQtrader webinar on 2021 second half market outlook on Singapore REITs. We have Mr. Chua I-Min joining us today. Before we start, let me give you a brief introduction to MQtrader. So you may be wondering, who is MQtrader? MQtrader is Malaysia Quantitative Trader Group, and we are an independent trader group that uses quantitative methods to perform our trade analysis and make our decisions in trading. As we seek to bring such a method to our traders, we have developed the MQtrader stock analysis system, and we have made it available for all our MQ members. So the stock analysis system, MQtrader stock analysis system, is a tool that brings what the institutional investors have to the retailer's hand. This enables our traders to make quicker decisions and with greater confidence because they are getting access to a steady stream of information and trading strategies. And we find it super important to know all this if you want to be a successful investor or trader. And as people always say, you must know your goal and risk management before you start your trading journey. So to use this amazing tool, you just need to become a MQtrader member. You can sign up to be our MQtrader member via the link in the comment section. Okay, just some announcement. We have a special sign-up program and after-event program that you will want to take note on. For all who do not have a trading account with MQtrader, here's the good news for you. You will get an extra 500 MQ points if you sign up for a trading account with MQtrader today. And this account will allow you to trade in Singapore. So the 500 MQ points is only limited to today, and the points will be credited to your account once your account is successfully open. You just need to send us your contact details through the open account link in the comment section, and our support team will contact you to guide you on the account opening process soon. So for MQ members who have RSVP with us, you can claim your 300 MQ points by the end of this webinar. All you have to do is just complete a short quiz that will be sent to your email after this, and submit a screenshot of any part of this webinar in the quiz. And for those who have RSVP but yet to join MQtrader group, I would encourage you to join now, because if you sign up for a MQ account today, you can also claim these 300 MQ points. You just need to click on the link at the comment section now and fill in your username, email, and password. This is so that you won't miss out on your rewards, and it's free. It's just like signing up to a Facebook account. Okay, we will have a Q&A session towards the end. You can type out your questions to our speaker at any point, and our MQtrader team will compile them and send them to our speaker. Coming back to the topic today, Singapore REITs have provided a stable source of passive income to our investors over the past few years, with some of the REITs giving about 8% dividend yield today. And the dividends for many REITs have been growing since inception and are still expected to grow going forward. And REITs have also been proven to be one of the most resilient asset classes during the current pandemic. They are one of the first asset class to rebound. If you compare Singapore REITs to their lowest point last year, they have already gone up by about 30% now. And at the same time, dividends for some of the REITs were not affected at all during the COVID period. Investors are still able to receive their dividends as usual. And this is why we picked this topic today. It will be very interesting to know more about Singapore REITs. Our speaker today, Mr. Chua, is a chartered financial analyst. And without further ado, let's welcome Mr. Chua I-Min to share with us his insights into Singapore REITs market. Mr. Chua, welcome.
Thank you so much, Grace. Good morning, everybody. So thank you so much for joining us this morning. It's so glad to see so many of you guys here. And yes, I see a lot of eager learners asking questions. They're very good. Thank you so much. Okay, now before I start, that would be great if you could just answer a simple question so that I can pitch my session correctly. Okay, do me a favor by typing in either 0 or 1 into the chat. If let's say you have bought Singapore REITs before, please help me type a 1 into the chat. If you have never buy a Singapore REIT before, please help me type a 0, please. Okay, I saw a 2. Okay, interesting. Okay, thank you. Great. Thank you so much for your response. Great. Okay. Looks like I am having a good mix here. 1 and 0, 1 and 0. Okay, good. Okay, good. So I have a good mix. Then probably I will have to start, okay, from the very basic. So for those who already have some experience, please bear me for a while. Of course, I will give more of update later. But since there's a bit of people who has probably haven't invested in Singapore REITs before, probably I just start with a little basic. Okay, good. Let me just share my screen. And as the host has mentioned, please feel free to ask questions anytime onto the chat. Okay, I may not be able to answer you immediately, but I'll be very happy to do so, okay, at the end of my sharing. Okay, now, so for today's topic, 2H 2021 market outlook on Singapore REITs. So I'm happy to present to you. Okay, of course, as per what the speaker had, sorry, the host has mentioned. Okay, yes, the REITs market has rebounded. Okay, so of course now the question here is this: is there any more rooms to grow? Do you actually expect the price to keep going up? I believe that is one of the key questions you will have in mind. So yes, let me give you the answer for this question today. A bit about myself. My name is I-Min. CFA stands for Chartered Financial Analyst. So that is my professional designation. I'm an MD and founder of this company, Invest Coach. So what I do is I specialize in education for retail investors. So this company is founded also to help retail investors make sound investment decision. I not only do stocks, I do real estate and financial planning as well. Okay, I have some flagship programs. The main one is this program called Create a Second Stream to Long-Term Share Investing. So I just want to highlight, I'm a FA. I'm a FA. FA stands, of course, for Fundamental Analysis, Analyst of Fundamental Analysis. So of course, in my program, I'll use FA, okay, to help to give you a perspective on the REITs market. Standard disclaimer, please take note, I'm here on education purpose. If there is any particular REIT that I mentioned, is more to illustrate the process, okay? Definitely not here to give any investment advice, so please take note of that. Now, these are the three things you are supposed to bring home with you today. Okay, so since you have decided to wake up bright early in the morning and join me in this webinar, okay, so maybe I'm quite sure you want something back. Okay, so these are the three things that you should bring back with you today. So number one, have a good sense of the Singapore REITs overview. Okay, what is so special about Singapore REITs? What are some of the uniqueness about Singapore REITs? So hopefully today you can remember some of them. Okay, next is we will actually break down the analysis into different REIT segments. So at the end of the day, REITs is about buying properties, and you know, industrial property and hotel property are very different. Retail property and office property are very different. So we can't really just look at the REITs market as a whole. We need to break down into different segments. Okay, and number three, if you ask me, is the most important part. Now, answer the question on how to invest. So REITs is actually, as in all other instruments, REITs has a very particular investment objective, is very capable of achieving. So it's actually good to understand how do you actually use REITs to maximize its potential to actually achieve that particular investment objective. Also, if you ask me, that is the most important part. So do stay throughout, and I believe you will definitely be able to get some insights from today's webinar. Now, what's a REIT? Of course, REIT stands for Real Estate Investment Trust. So this is really for those who really have no experience in buying REITs. So it's a vehicle structured for investors to put their capital for investment into large-scale income-producing properties. So long story short, if you buy REITs, you are buying property, full stop. Okay, this for FA, FA of course stands for Fundamental Analysis, is very important. So end of the day, you know, when we invest, please try to understand what is the underlying business, what is the underlying instrument you are buying here. Okay, so please, buy REITs, you are a property investor. Okay, you are a property investor. So like any other property investor, please at least know what properties you are buying, where is the location, and you must be confident that this property 5 years later, 10 years later, it still can generate income for you. So in fact, that is the main analysis. So a lot of people, when they look at REITs, they just ask what is the dividend yield, what is the gain ratio. Yes, that one is important, but in fact, what is more important is that, hey, you are a property investor. Where is your property? Okay, you cannot be a property investor and people ask you, where's your property? You don't even know. So this is what REIT is about. You are buying properties. Of course, this time around, you are buying together with a lot of other people and you are buying large scale properties. So some uniqueness for the Singapore REIT structure is slightly different from Malaysia. So please take note of that. So I believe this one 90% profit to be distributed. This one should be same as the Malaysian REITs. So pardon me, I haven't looked at Malaysian REITs for a little while. I'm not sure rules have changed, but I'm quite sure this one should be the same. So at least 90% of the profit has to be distributed. So this is the only instrument listed whereby based on black and white, they must distribute dividends. So a lot of blue chip counter, yes, they distribute dividends, but if let's say they choose not to, they can. But for REITs, so it's a must based on black and white. So I believe this rule is going to be different from the Malaysian ones. I can't remember exactly what is the Malaysian debt ratio limits about. For Singapore REITs, the debt ratio limits is 50%. Which means to say for every $1 million of property, maximum the REITs can buy is 500,000. So there is a cap of how much the REITs can borrow. So this is a very good protection to the shareholders, to the REITs owner. So I'm very proud to say that throughout the whole COVID period, so of course, throughout the whole COVID period, the rental is affected, especially for retail properties, for office properties. But I'm proud to say that none of Singapore REITs actually get into trouble because of the debt issue. Okay, because of the debt issue, because of reduced rental, none of them actually get into trouble because of any debt issue. Okay, due to COVID. So this is one of the reasons why is actually because they have to follow to this rule. Okay, and if you follow to this, it's actually, to be very frank, quite difficult to have problem with the banks. Okay, so these are some of the characteristics of REITs. Now, let's do a little game here. Can you all make a guess how many REITs do we have listed in the Singapore market today? Can I just get you all to guess? Sometimes it's good to have a little bit of fun so that you can remember the numbers more clearly. Can I just trouble someone to guess? 20 to 30 more than that? More than 30? Anybody else? Please guess. Yes, more than 30 REITs. 50, okay, not too much. Between 30 to 50. 40, very close. Okay, it's between 30 to 40. Between 30 to 40. No, between 30 to, sorry, between 30 to 40, 39, correct. Okay, Ben, congratulations, 39. Okay, congrats to Ben. Thank you so much. You got the answer, 39 REITs, 39 REITs for you to choose from. So, Singapore actually in Asia is the second largest REITs market, second largest, just behind Japan. Japan, in terms of market cap, Japan is the largest, then followed by Singapore. Okay. Then, of course, now Singapore REITs market is even bigger than Hong Kong. China just started their REITs market. So, of course, now Singapore is actually still bigger than the China REITs market, but I'm quite sure given time, the China REITs market will overtake us. But hey, as of now, we are still the second largest REITs market in the whole of Asia. Also, we have 39 REITs for you to choose from, and these are all the 39 REITs you can actually choose from. 39 for you to choose from. Now, the other uniqueness for Singapore REITs is this. Here, I'm quite sure, like for example, Malaysian REITs, the last time I looked at it, most of the properties are actually in Malaysia. So if you look at Japanese REITs, most of the property are in Japan. if you look at Australian REITs, most of property in Australia. Okay, so Singapore is quite unique. Yeah. So in fact, for Singapore, okay, 80% of the properties are not in Singapore. 80% of properties are not in Singapore. So basically, if you participate in the Singapore REITs market, you eventually going to be a global property player. You're going to be a global property owner. So like I always tell people, people ask me what I do, okay? I am not only shareholders of 30, 40 companies, okay? I'm at multinational companies or the largest company in Singapore. At the same time, I'm also a global property owner. I'm not boasting, I'm not boasting, okay, so if you actually want to be the global property player, all you have to do is buy some REITs. Okay, so in fact, now again, just a little quiz so that you can remember the numbers better. Now, if let's say, for example, if you only want to buy a REIT now with only Singapore properties. Okay, so let's say, for example, you want to buy a REIT with only Singapore property. Make a guess, how many REITs can you choose from? So let's say if you want to buy a REIT with only Singapore properties, make a guess, how many REITs can you choose from? I'll just guess, just guess. Okay, 15 lesser, 10 lesser, less than 10, 4 a bit more. Okay, between 4 and 8, between 4 and 8, between 4 and 6, between 4 and 6. Okay, 5. Congrats, Raj. Okay, so in fact, there's only 5 pure Singapore property REITs. Only 5. Only 5. Okay, so of course, a lot of REITs have Singapore property. Okay, but a lot of REITs have, like, for example, Singapore Australia, Singapore China, Singapore Malaysia properties, for example. Okay, so a lot of REITs have Singapore properties, but then if you want to buy only pure Singapore property REITs, in fact, there's only 5. Only 5. So I just want to give you a sense of how global our REITs market is, and this is again something very unique compared to a lot of other REITs market out there. So just to give you a sense. Okay, now so firstly, when you want to analyze REITs, as I mentioned, at the end of the day, we cannot just see real estate as one market. Okay, I'm quite sure you know different real estate type, different property types have different type of markets, different performance. So in the first place, when we analyze REITs, we need to break down into the different property categories, So we actually from office, industrial logistics, retail malls, hospitality, and healthcare. So these are the 5 property types that you have. Once again, office, industrial logistics, retail malls, hospitality, and healthcare buildings. Okay, now, so as I mentioned just now, in fact, one of the most important questions you need to answer when investing in REITs is this. Okay, this property 5 years later, 10 years later, do you think they can continue to be rented out? That is, in fact, the most important question. But unfortunately, this question, there's no definite answer. We are talking about 5 years later, 10 years later. Okay, nobody dare to say, oh, I guarantee this one confirm very good. 5 years later, nobody knows what's going to happen. Correct. Some of us don't even know what's going to happen tomorrow. So we'll talk about 5 years later, 10 years later. But you must have a preference. You cannot say you don't know, then you don't care. No, you must have a preference. Okay, let's do a little poll to try to further explain what I'm trying to say here. Of course, now with the COVID, the work from home is a very common activity that most companies are adopting right now. Now, I need your opinion. This is an opinion, no right or wrong. If you think that this work from home is going to be a permanent feature, that means even after COVID, most of the companies are still going to do work from home. Please help me key in a 1 into the chat. If you think that no after COVID, people will go back, then please help me keep a 2 into a chat, please. Thank you so much. Oh, interest 1.5. Thank you so much. Okay, good. I think it's a good mix. Thank you so much. Thank you so much. Again, it's a good mix. Okay, as I mentioned, no right or wrong, no right or wrong. Okay, but end of the day, we must have our certain preference. We must do our analysis. Of course, if you think that work from home is going to be permanent, obviously it's going to affect the office, then of course don't invest in office REITs. Okay, there's so many other REITs for you to choose from. There are retail REITs, there are hotel REITs, whatever. So many other REITs for you to choose from. Okay. Then of course, if you think that if actually can go back, eventually go back, that I think you should not pay attention to office REITs because the prices, yes, it has bounced back. Later, I'll show you some numbers, but definitely not to pre-COVID level. So in fact, if you ask me, there may be some good opportunity to buy undervalued REITs right now. But of course, it may take a while, given that nobody knows when COVID is going to end. Okay, it may take a while to go back to pre-COVID days. Also, later I can show you some numbers. So I also want to share my opinion. Again, my opinion is not a fact. My opinion is not a fact, but I think I'm allowed to share my opinion. So if you ask me, I'm still very bullish on office REITs, especially for a Singapore office. Okay, especially for Singapore office. I'm not too sure whether you also get the news. So basically, Chinese tech companies, okay, a lot of China tech companies, like for example, your TikTok, your Tencent, your WeChat, your ByteDance, all this, a lot of Chinese tech companies, they are actually setting up overseas headquarters in Singapore. Okay, yes, of course, their China headquarters will be in China, but a lot of them actually want to become like a global player. They actually want to have global business, and the global HQ is actually in Singapore. So for a lot of these Chinese tech companies. So in fact, one of the recent report, I believe I have the article showing later, okay, showing that even during COVID time, the net rental is positive, which means we actually have more people renting from our offices compared to more people giving up the space. So the net rental is actually positive. Okay, so if you ask me, hey, in fact, I am actually now paying a lot of attention of office. And yes, anyway, I do believe that, eventually when COVID is over, people will go back to work from home. So that is my personal belief. You don't have to agree with me. Okay, end of the day, whether I'm right or wrong, don't know. Nobody will know anyway, because we are talking about 5 years later, 10 years later. But the point I'm trying to stress is this is the kind of analysis you need to do. Okay, eventually you need to do this. Then after that, you have to come up with your certain preference. Okay, now the next is industrial logistic building. So basically, even though they're all these REITs are classified here, but in fact, there are 4 different type of users. 4 different type of users. We have industrial users. We have logistic users. So basically, industrial, if you go in, you will actually see factories. You actually see factories. Whereas for logistics, when you actually go in, you actually see warehouse. You actually see warehouse. At the same time, there's actually this thing called business park. Business park, like for example, at Sanders. So business parks are basically offices sitting on industrial land. Offices sitting on industrial land. Then the up and coming one is actually this thing called data center. Data center. So what's a data center? If you actually enter into a data center building, so what you see is just rows and rows of servers. Okay, rows and rows of servers. So these are for cloud computing, for disaster recovery centers. So that is up and coming. The demand has been very strong, has been growing. So obviously, for obvious reasons, as the world get more digitized, then you definitely need more data centers. So again, for this segment, if you ask me, the growth, there's some growth engine there. Okay, data centers, a lot of them are actually going to data centers, so I see potential growth. And of course, logistics is tied to e-commerce. So in fact, again, I'm quite sure you agree with me that e-commerce is actually still have a lot of growth potential. So like, interestingly, just it happened to me myself. So recently my fridge broke down and I wanted to buy a new fridge. So in the past, if you want to buy a fridge, the first thing to do is you actually go to some shopping malls or go to some mega stores or those electrical appliances shop to actually look for a fridge. I was about to go already, then my wife said, why waste time to go? Just take your phone and just compare which which I did. And yes, online, I just bought a fridge. So yeah, of course, I'm a bit late. I know it may sound, what do you call it? How come only until now then I do this? But my point here is this. So more and more people are slowly going into e-commerce, even though that e-commerce now is already very established, which also means to say there's a lot of growth. And of course, logistic buildings, if you ask me, still have a lot of growth potential. Okay. Now, next is retail mall. Okay, I always like to ask this interesting question. Retail malls, of course, again, a lot of people say that because of e-commerce, the retail malls will be affected. So maybe I just want to ask this question only for the ladies. Only for the ladies. Ladies, all the ladies, do me a favor. Help me to answer this question. Do you think that we will ever have a day whereby there are no more retail malls? Okay, there's no retail malls. Do you think that's possible? Now, if you think that's possible, please help me type a yes. If you think that no, no matter what, okay, there will be retail, please help me type a no. Okay, I think that I only get a yes. Probably that yes is from a guy and not from a lady. But if I could just guess the name, I believe all the ladies will agree with me. So it's no, no. I don't think there's one day we can live in the world without retail malls. So especially for places like Singapore. Okay, you think about it. Okay, for Malaysia, still okay. Malaysia, you can drive 1 hour wherever you are. Okay, maybe you drive 1 hour, you go to Malacca, or you drive 1 hour, you go to Penang. There is a lot of great outdoor for you to enjoy. So you drive out 1 hour, can go to this lake, drive 1 hour, can actually go to this jungle or this waterfall. A lot of spaces. Singapore is not like that. Singapore, don't talk about drive 1 hour. Like for example, if you actually want to cycle around Singapore, you can do it in like, okay, if you're fast enough, cycle around Singapore, you probably can do it in maybe like 8 hours, 10 hours. Okay, you can really cycle. If you actually drive 1 hour, you're maybe from one end to the other end already. Okay. So in that sense, for Singapore, a lot of us will spend time in retail malls. So basically, if you ask me again, that's my opinion. There is always a space for retail malls. Of course, yes, I do agree that some of the retail malls will be gone, will be affected, but I don't see that there'll be one day we will live in the world without retail malls. So the business will actually be very good if you ask me. Okay, I'm still bullish about retail malls. Okay, hotels, of course, is actually badly affected by the COVID. But again, depends on how you look at it. Hotels REITs is one of the poorest performers among all the REITs. So for obvious reasons, a lot of hotels are still not back. But again, if you are a long-term player, okay, this is the time actually for you to pick up some very good hotel REITs at a very low price. And lastly, we have healthcare buildings. So for those who are familiar in Singapore, like for example, Parkway Life REITs, you actually own the Glen Eagles Hospital buildings. You actually own Mount E Hospital building. Then you just rent out, okay, rent out to the hospitals. So that's what the REITs will do. Okay. So hope you all can remember total 39 REITs today. Of course, this is expanding. Every year, usually we have 1 or 2 new REITs listed. And the first thing you need to do is to classify them into these 5 categories. Then the most important question to ask is this: hey, in your opinion, do you think that fire status, 10 status, such properties can continue to, get such good rental? Okay, if you are interested to know more detailed information, I just want to share some resources you can take a look at. So this is the SGX website. I'm actually going to do a live demo very soon. If you want, you can just take down the link how to get there. I'll do a live demo very soon. And of course, there's this report which I strongly encourage you to take a look. Okay. because I think this is one of the best REITs report, in my opinion, that actually capture all the necessary information about REITs that you have. So let me just do a very quick demo on how to access to all this information. You can go to sgx.com, obviously, sgx.com. Okay, securities, price screener, stock screener. Okay, then you key in any REITs. Also, let's say, for example, capital land integrated commercial trusts. So you have all the information here, the price information. Okay, all the various information you have. Then, of course, if you click on this link, you will go to the website. So for the report is actually here, okay, research and education under research sectors. Okay, research and education, research sectors. Okay, then what you have here is this. You can see the chart book. So you can see it's updated on a monthly basis. So down here again, I believe okay, whatever information you need about Singapore REITs is actually all there. So in fact, one of the very interesting one, which is not easily available elsewhere, okay, like this one, for example. So down here, you can actually see the institution and the retail fund flow, okay, for that month, how much is actually bought, how much is being sold by retail investors and institutional investors. I think this piece of information is not easily available anywhere else. Okay. So I have actually talked about what are the REITs. Now let's get into the real crux of today's seminar, which is how is the market doing? I think a lot of you here actually want to find out, hey, so how now? Still can buy or not? Still cheap or expensive? So okay, so this slide actually gives you a very quick overview. So of course, this point, okay, I hope you all can see my cursor. This point, pre-COVID, now this is the pre-COVID point, as you can see. Okay, not too sure you can see my cursor. So anyway, I'm pointing at the 2020. Okay, then obviously because of COVID, just like any other stocks, okay, plunge. Okay, and it has recovered. So you can see from an overall REITs perspective, it has indeed recovered, I would say up to 70%. Or definitely not back to the not back to the pre-COVID level yet. Okay, but yes, I would say overall perspective 70%. Okay, but as I mentioned, it's actually good to break down into the different segments. So I do it two ways. So what I did here is this. I compare the top 5 largest REITs in terms of market cap. I compare the top 5 largest REITs in market cap with STI. Okay, I'm quite sure you all know what is STI, Straits Times Index. That's the benchmark index for Singapore. So you can see most of the REITs has already outperformed STI. Most of the REITs have already outperformed STI, as you can see here. Okay, in terms of industry, this is probably where it gets interesting. So what I did here is this. I actually get REITs from different type of property type, as I mentioned just now. Okay, industrial, retail, office, hospital, healthcare, different property types. To give you a proxy, of based on property types, how is the REITs market performing right now? So I think this is a better measure. So as I mentioned just now, for REITs, you cannot generalize. Okay, you cannot say that retail properties and industrial properties, their performance is the same. Cannot. Okay, they definitely perform differently. So I actually use some of the most significant REITs of that particular property type and plot again STI. Again, this main blue line, this thick blue line is STI. So from here, you can have a very good picture. Okay, this yellow line is healthcare, and this purple line is industrial. So basically, you can see that the healthcare and industrial, they have way surpassed STI. So they have been performing very good for obvious reasons. Because you think about it, during COVID period, Obviously, the healthcare rental is not affected. So in fact, the healthcare business is actually better during COVID. So obviously, you don't see the REITs affected. Also, same for industrial. So a lot of industrial, a lot of factories, they are all long-term lease. Okay, they're all long-term. So or either that, the warehouse. Okay, it doesn't mean that, oh, because of COVID, or all the warehouse will collapse, all the factories are bankrupt. No, so they are long-term lease. So that's why their dividend has been very resilient. And because of that, you can see that they are one of the first to recover. And in fact, now they have bounced back even better than the STI. So for these two sectors, if you take it closely here, so this light blue line is the retail, and this pinkish line is the office. So you can see, okay, so they are more or less, very similar to the STI performance. Very similar to STI performance. So yes, they has bounced back, but there's nowhere near pre-COVID level yet. And of course, as mentioned just now, hotels is actually still affected, as you can see, haven't really recovered. So just to give you a sense of how did the market rebound, okay, again, as I mentioned just now, you overall, yes, come back by about 70%, okay, compared to pre-COVID level. But then if you break down the different sectors, the performance are very different. So give you a sense of what are the REITs that probably actually could still be undervalued based on this perspective. Okay, so let me dive one step deeper. To give you a sense of what I'm trying to put across here. So basically, I'm actually going to put into detail of different property types. So let's take a look at the office and retail first. Okay, so I actually put them together because they are quite related. They are actually quite related. Okay, they're actually quite related. So one of our very representative REITs is actually this one called CapitaLand Integrated Commercial Trust. So just to give you an overview, what are the properties they have, like in terms of retail. Okay, for those who are Singapore, I'm quite sure these names will ring a bell to you. Bedok Mall, Bugis Junction, okay, Bukit Panjang Plaza, so and so forth. IMM. Okay, I'm quite sure if you come to Singapore, you will see at least one of these buildings. They also own some of the most prominent office building in Singapore, Capital Towers, okay, 1 George Street, Capital Green. And at the same time, they are actually owner of integrated developments. What are integrated developments? That means in one property, there's more than one property type. Like for example, Raffles City, you have retail, you have office, you have hotels. Same for Funan, you have retail, you have a hotel element, so on and so forth. So I just want to use this REIT. So if you ask me, this REIT is actually quite interesting. So based on the price, okay, so looking at this, based on the price level, yes, it has bounced back. But my point here is this: is the rebound is still normal. It's definitely still not back to the pre-COVID level yet. As per this chart show, it's not like, oh, it's performing superly well. Also, yes, rebounded, but in a normal range. But yet, I see a lot of growth potential. Okay, so this is as per what I mentioned just now. The net demand for CBD Grade A office space turned positive. Okay, so a lot of people thought that, oh, because of work from home, you have more people, releasing the office space that people taking up. So this, how you actually calculate here is this. Positive means what? That means you have more people renting compared to more people giving up the space. That's what positive means. So even during this point in time. Okay, so as per why is this happening? I did explain just now because of this. As you can see here, Chinese tech giants are expanding in Singapore. So as you know, when the Chinese come to Singapore, the way they actually take up office space is in large chunk. So I'm quite sure you're familiar with how the Chinese companies will do as well. When they come, they really make their presence felt. So they actually come in, rented large chunks. That's why it's actually net demand. And more are coming. The way you see it, more and more are coming. Okay, like for example, this is also one of the recent articles. The super rich are choosing Singapore as the world's safest haven. If you actually get to read this article, like for example, this Bentley. So I'm actually not sure how expensive Bentley be. I think easily 500,000 or $1 million. And apparently in this article, if you get to read it, they say, so this Bentley salesperson, first time in his life, someone actually bought a Bentley from him over a phone. Just call the phone and say, I want to buy Bentley. So this is the first time in his life he's actually getting this kind of deal, and he's also very surprised for himself. So you think about it, when the super rich come to Singapore, you would have a lot of people that follow, like for example, the family officers, the fund managers, okay, even the Michelin star, they'll start coming into Singapore. So with that, you do expect the office space and of course, the retail malls to be actually taken up. So I'm actually quite bullish from a longer term perspective. And given that now the prices haven't really fully recovered, I do see the opportunities there. Okay. And Singapore this year, our GDP is set to grow 4 to 6%. In fact, recently they have updated. I believe the recent numbers is 5 to 7%. So this number is actually quite significant to us. Why? It's because when you actually go back to by at least 6%, that means we have hit full recovery. So last year, Singapore GDP actually dropped by 5 to 6% because of COVID. So if we this year come back by about 6 to 7%, that means we are talking about full recovery. Okay, of course, the recovery is different sectors. Obviously, our hotel sector is actually still bad. Our aviation sector is still bad. But in terms of the overall, in fact, it hit full recovery. So in that sense, the point I'm trying to stress at here is this. Since that the economy has go back full recovery, I think we should expect the prices for REITs to go back to pre-COVID level. I think that's fair, right? Okay, do you agree with me? So let's say GDP go back to pre-COVID. I think the prices should also go back to pre-COVID. So which is still not happening yet, at least for this sector of REITs. So I think it's something for us to watch out for. So this is office and retail. Okay, let's look at some of the numbers. As you can see here, so in fact, the prices, based on these prices, current prices, I think I took it, this is done earlier this month. The forward estimated yield for this particular REIT, Capital Land Integrated Commercial Trust, so we actually expect to get about 10 cents per year. And if you, depending on the price you buy, you are getting probably a dividend yield of 5%, which is actually quite decent. Okay, compared to Singapore interest rate, 5% is actually quite decent. So you're talking about, I would say, grade A property getting about 5%. With such growth potential, if you ask me, is quite an interesting deal to look at. Okay, so that is for office and retail. Now let's take a look at the hotel sector. So in this case, I actually use CDL Hospitality Trust to give you more insights of how the hotel sector is performing right now. So based on CDL, you can see that most of the hotels are actually in Singapore. Okay, Orchard, Grand Copthorne, okay, they have hotel in Sentosa. At the same time, they have properties in all these different countries. So as I mentioned, so a lot of them have a global portfolio. So they don't only have properties in Singapore, they even have properties in Maldives for information. Now, a lot of people thought that the hotels are dead. Actually, not really true. Not really true. As you can see in this article, staycations is coming up. That a lot of hotels are actually using as the stay home notice for stay home notice facilities. Okay, so this is actually happening. So it doesn't mean that now hotel is not making any money. Not true. So staycation is actually very popular in Singapore. So in fact, recently when I tried to go and get a staycation, easily I need to book like 2 weeks before, minimum 2 weeks before. If not, you cannot get anything decent. Okay, at the same time, some of the hotels are also used for stay home notice facility. So in fact, they are actually still making some money. Of course, compared to pre-COVID, it's far from that, but it doesn't mean that they are losing big time right now. So they are actually getting some income. So hotel, if you ask me, yes, probably can wait a while, depends on how you see it. So this is one article I actually get online. Yeah? Basically, there are some industry experts that actually say that probably the normal travel will only come back in 2023. Okay, will only come back in 2023, of course, to which is own. So if you actually believe in this article, so probably see how you actually want to do it. Obviously, I'm not going to lie to you. Okay, basically the property income has actually came down. Okay, for obvious reasons. Okay, still good, but they actually came down, even though recently compared this year compared to last year definitely has increased. Definitely has increased, but net overall it definitely has come down. Okay, so if you ask me, the prices are definitely very attractive. The potential is definitely there. So it's a question of timing. Okay, eventually, I myself, I'll definitely go into a hotel, but it's just a question of time. Of course, if you believe in the article, the industry only come back at 2023, you may actually want to wait a while. Okay, but if you think that by then, prices already want to go up already, if you today you actually want to start collecting, I think it's actually quite a good move as well, if you ask me, because it's very hard to time precisely when is the point whereby the price is still low and yet the business is going to pick up. Okay, I hope you know what I mean. Okay, and it really depends on whether you want to wait or buy now. But my point here is this: I think this is really a hidden dragon, waiting to be unleashed. It's just a matter of time when. So of course, if you buy now, the dividend yield is definitely not exciting, as you can see here. Okay, let's take a look at the industrial REITs. So this time around, I actually use Mapletree Industrial Trust as a proxy, to see how the REITs perform. So again, just to give you a sense of what kind of properties they have, they actually have buildings in Singapore and US, and total of 115 properties. So industrial, they tend to be the smaller buildings, like what you actually see on the screen here. So to give you an overview, this is total what they have: AUM 6.8 billion. So they have high-tech business park, flatted factories, stack up, ramp up buildings, light industrial building. As I mentioned, they are going into data center in a big way. They're actually going into a data center in a big way. So for industrial, there's one thing you may actually need to take note of. So you can see here, the land tenure for their US property is freehold. Land tenure is freehold, but for Singapore properties, the land tenure, as you can see, some only have like 23 years, some only have like 48 years. So this is something to take note of. I understand that Malaysia mostly freehold property. So that is, you may want to pay attention to this. In Singapore and in certain other countries, like for example, China, so some of the properties are actually leasehold. So you may actually want to pay attention to how many years do they have the user right for that property. Something to pay attention to. Okay, so even though now that the industrial REITs, the price has already came back, as you can see just now, if you compare to STI, so industrial properties is actually one of the top performer in terms of how it actually recovered. But then the thing here is I see a lot of growth. So this REITs, I see a lot of growth story. There's actually a lot of growth potential. So one is because the properties are smaller, they have been very actively acquiring. They have been very actively acquiring. So think about it. So let's say, for example, I want to buy a retail mall. So there's only so many retail mall in Bukit Bintang, for example. Okay, I'm quite sure there's so many people want to vie for it. But in terms of industrial properties, there's actually tons of them out there. And if you actually take from a global perspective, there's a lot for you to choose from. So it's actually easier for industrial REITs to actually do acquisition. So which is what this Mapletree has been doing as well. They keep acquiring. So in that sense, for this REIT compared to a lot of other REITs, it's a lot easier for them to grow, and the growth potential is definitely there. And as I mentioned, they are now into data centers. So this is a report I actually have. You can see that the demand, the global cloud traffic has been increasing steadily over the years. And I think that everyone will agree with me that the data center will actually continue to grow, and which is the area they are growing. So in that sense, my point is this: yes, is this REIT undervalued right now? I don't think so. Okay. I don't really think it's undervalued, okay, but if you actually see this as a growth REIT, I think there is a potential there. Okay, so and historically this REIT has proven to perform. So what you actually see here is the dividend. Okay, dividend. So I think the picture speaks for itself. The dividend has been increasing steadily over the years. So currently, if you actually buy the REIT today, you're looking at about 4.4 to 4.8% yield. Okay, as I mentioned, yes, it's not exactly cheap. Okay, this REIT is not exactly cheap, but I'll put it this way: it's not exactly undervalued. Okay, but like I said, to me, I will see this as a growth REIT. Okay, with growth potential. Then probably if let's say you are confident of the growth, if you believe that the dividend will keep increasing, hey, I think this is also something for you to consider. So my point here is this: end of the day, you cannot just buy because it's cheap. Cannot just say that, oh, cheap buy. No. So you have to understand the story behind. So if you ask me, the REITs market now all has very interesting story. So just to summarize, office and retail, they are slightly undervalued. Okay, they still have a growth story. Okay, which is the office is actually coming back and more people are taking office space in Singapore. Also, that is the angle for office and retail. For hotels, if you ask me, okay, so yes, we don't expect a recovery very soon, but because now the price is very depressed, it may make sense for you to start collecting. And for industrial, okay, the prices are definitely up already. That definitely has came back up. Okay, not cheap. Okay, but if you believe in the growth story, I still think it's a very nice angle for you to consider. Okay, so which one is the best? To each its own. So I always believe there's no best investment, only what is most suitable for you. Okay, good timing. I have 7 minutes left, which I just want to cover the last part. At the end of the day, how should you invest in REITs? So as a FA, in fact, our starting point for investment should always be, what are we trying to achieve here? So investing should be more than just simply more money. I know, yes, we invest for more money, okay? But a lot of things also can give you more money. Go casino also can give you more money if you're lucky enough. Okay? Or you buy Bitcoin also can give you more money. Okay, if you're lucky enough. So the thing here is this, so for us, especially for professional investor like myself, we always ask, yes, more money for what? How you have to use the money? Okay, then we decide what kind of instrument is best for you. So let's say, for example, if you are interested in property, okay, you actually want to buy, you are actually, some of us just love to buy properties. Okay, but there's actually this saying in the market. If you want to buy residential property, yes, anybody can buy. Okay, so residential property is always a function of price. Okay, at least in Singapore context. Okay, definitely can rent out. It's just a matter of what price only. Definitely can sell. It's just a matter of what price only. Okay, but commercial properties are always for professionals. You don't know what you don't know. And sometimes can end up in jail some more. Like, for example, in Singapore, if let's say you go and buy an industrial property, okay, industrial property has very strict restriction. Like, for example, you cannot rent out to certain parties. So if let's say you go and buy industrial, then go and rent out to wrong people, can end up in jail for information. So if let's say you actually want to buy commercial, and why don't you just buy into REITs, then solve all the problem? You have the professionals doing everything for you, and all you have to do is just wait and get the dividends to come to your bank account. Super passive income. Okay, and the returns are, if you ask me, as good as if you go and buy a property on your own. Also, this is one good reason why you should actually invest in REITs. So if you are someone who really love property, want to buy commercial property, why take the trouble? Okay, now, this is something closer to my heart. So I actually buy REITs quite a bit myself. Why? Because my objective now, especially this point in time now, my objective for investing as a whole is to achieve this state called financial freedom. Okay, I'm quite sure a lot of people also want to achieve this state. So this is my objective. So what is financial freedom? Financial freedom is when passive income is higher than my expenses. So basically, don't have to work. Okay, don't have to work. I can actually live happily ever after. So what we mean by passive income is really you don't do anything, money just come to a bank account. And at least based on my own, now my best source of passive income is actually from REITs. So number one, as I've proven just now, REITs business model is actually rental. They have a very steady income. Okay, at the same time, REITs they must distribute 90% of the profit as dividend. So their dividends are actually very regular, very regular. So very interesting. After, the only effort I need to do now is to buy a good REIT to build up the REITs portfolio. And after that, I just sit back, relax, and just wait for money to come into my bank account. That's it, full stop. Okay. So just to give you maybe more detail of what I do, yes, this is what I do now. So basically, like I said, every month I will actually put 20% of my salary in this thing called retirement savings account, which is another bank account whereby it only can use for investment. And every month I actually invested in REITs. So for REITs, of course, I have different portfolios. I put my money in different buckets or whatever you call it. So one of my bucket is every month I'll just buy REITs. Every month just spend the same amount by REITs. Okay. And of course, now I'm actually getting dividends and I will reinvest. So what I have done here is what I've created an investment system. Okay, this one will just get snowball. I still put my money in. And of course, they get dividends. They actually get snowball bigger. And yes, maybe I still have some time just to give you a sense. I always like to do some mathematics in my seminar so people can get a sense idea. So now I actually want to create a $7,000 per month passive income. $7,000 per month passive income. Why 7,000? Because I calculated my expense plus inflation. I need about 7,000 to cover. So 7,000 per month. 84,000 per year. 84,000 per year. Okay, if I believe that eventually my REITs portfolio can give me 6% dividend, so let's say this REITs portfolio give me 6% dividend, how much should be the size of this portfolio be so that I can get my $7,000 per month and 84,000 per year? So can I trouble you all to key into a calculator? Okay. How much do you actually how much should this portfolio size be? Okay, what should the portfolio size be? Okay, so that 6% of this portfolio size, I can actually get my 84,000 per year or 7,000 per month. Okay, I got one answer, 1.5. Any other answer, please? Any other answer? Okay, 1.4. Thank you so much. 1.4. Thank you so much. So in fact, now this is my own personal objective. So every month I buy REITs. And of course, I'm starting to buy more and more. Why? Because down here I still have income and the dividends are coming in. So that is this multiplier effect. And I'm happy to say that probably just give me another 10 years. Okay, I will achieve my objective. And yes, hopefully by then, next time you want to attend my talk, have to fly to Bahamas and see me giving talks under some sunshine in some beach clubs. Of course, that is my dream. Okay, but this is my point here. End of the day, when you invest, cannot be just about more money, more money, more money, and no. So please try to understand what you're investing for. For me, passive income, financial freedom, and REITs is actually one of the best instruments for me to do so. And how I do is every month I just buy, every month I just see how my REITs portfolio snowball, and slowly and surely, okay, I will be there. So this is how you should have a perspective on investment. Okay, perfect timing, 10:30. Okay, great. That's all the time I have. I think after that 15 minutes for Q&A. So to conclude, REITs is definitely a good source of passive income for financial freedom. Okay, office and retail, not fully recovered. Okay, as I mentioned. Okay, and there's a presence of growth driver, so something for you to think of. Hospitality, awaiting the return of travel industry. So it really depends on when you think the travel industry will come back. Of course, it may make sense to buy now if you don't mind waiting a little bit more, because if you want to time the market exactly, not so straightforward. And of course, industrial. Yes, the prices is the one of those that has bounced back, but then they still have growth potential. So it really depends on what kind of investment story you are keen to look at. Okay, I believe I only have 15 minutes for Q&A today. So in the event that I don't get to answer your question, I apologize in advance. But I'll be happy to also talk to you on this platform that I have, facebook.com/Chua. You can continue to ask me questions there, or you can scan the QR code right now, or either that key in this link. Okay, do like me. So once you like me, you can also get my investment thoughts on a daily basis. And after that, you can ask me questions there. Okay, so far my response rate is quite fast. Usually within a day, I will respond to you. But please take note, I cannot answer questions like Mapletree can buy or not, CapitaLand can buy or not. Sorry, I'm not allowed to do so. How I wish I can do that. Tomorrow I go and buy Mapletree, then go and tell the whole world Mapletree is good. Sorry, I cannot do that. Okay, so if there's any question on the very specific counter, I apologize, I can't answer. But anything besides that, like the various analysis, anything to clarify from my slides, I'll be very happy to share my answer with you. Also, once again, this is the platform to reach out to me after this webinar. Okay, facebook.com/IamChua, I'm CHUA, or you can just scan on this QR code right now. Okay, and that's all I have. Let me just pass the stage back to Grace, please. Grace, the court is yours. Thank you.
And to all our viewers, thank you for tuning in to this session. We will have a Q&A session soon. If you have any questions regarding the session today, please type them out in the comment section, and our team or Mr. Chua will try to answer your questions in this webinar. Let me just quickly share my screen. Okay. Yeah. So if you want to know more about trading in Singapore, we have included the related link in the comment section and on the screen as well. Please feel free to visit the link for more information. You can also follow the SGX Invest Telegram channel to receive the latest market insights at your fingertips. You can also search for SGX Invest in your Telegram app or scan the QR code here. I give you about 3 seconds to do so as well. Okay. A quick reminder, should you choose to open a trading account with MQtrader, all you have to do is to send us your contact details through the open account link in the comment section, and you can claim an extra 500 MQ points when your account is open. For all MQ members who have RSVP with us, if you would like to claim your 300 MQ points, remember to complete the short quiz that will be sent to your email after this, and include a screenshot of the webinar in the quiz itself. If you have yet to sign up for a MQtrader account, remember to sign up now. And again, you can scan the, sorry. So this is the steps that you can follow to claim your 300 MQ points. Yeah. So let's start our Q&A session, and allow me to be selfish to ask the first question. So Mr. Chua, I believe your sharing has sparked lots of interest in REITs trading, including me. So my question is, and also I think most of the audience would like to know also, to what extent do you think that inflationary pressures or possible rise in interest rates would affect Singapore REITs?
Okay, thank you so much. So of course now, if you just about Singapore, so the inflation has been very well controlled. So inflation for the past few years, you're talking about 1% or in fact below 1%, especially talk about core inflation. Okay, for obvious reasons, I think the prices, there's no reason for upward pressure. In terms of interest rate, same also. Okay, so in fact, if you talk about property loan in Singapore, I'm not too sure about Malaysia. If let's say, for example, today go and buy a property, you get property loan in Singapore. Singapore, the lowest you can get is about 1%. Okay, so in that sense, of course, it cannot be so low forever, but I don't see a pressure for that to come up, at least in the recent years. It'll be quite crazy this period, no matter what, we're still in a crisis, to increase interest, to increase inflation. So I think for the next 2 to 3 years, I think it's quite fine. Okay. So of course, if let's say we talk in terms of theoretically, if let's say interest rate go up, obviously the REITs will be affected. Okay, so the REITs, most of them, they borrow up to 30 to 40% of the property value. So of course, interest rate up, okay, the interest will be affected. But don't forget, very likely when interest rate up, okay, they are also probably in the position to increase the rental. Think about it.
Yeah.
Okay. The only reason why interest rate up is because the market has actually improved. Okay. People are getting back jobs. Okay. And okay. The central authority able to increase the interest rate a bit. So in a good economy, of course, rental will go up. So in that sense, net, I think the impact will be minimal. But of course, everybody know that interest rate up, the interest will increase. That is a fact. Yeah.
Okay. Yeah. Thank you. Yeah. So another question is from the audience. What's your opinion on US Fed tapering and ultimately rate increment impact the REIT investment return?
Okay. So let's understand what is this US tapering. So basically during the COVID period, so US has, put it very bluntly, has been keep printing money. So in terms of tapering means that they have cut back the printing. Okay, it's not stop printing. It's just cut back the printing. That means they're still printing. It's just a matter of printing lesser money. So if you ask me, that is a very healthy thing to do. You cannot expect US market to keep printing money forever. So in fact, I tend to see it quite positively. I tend to see it quite positively, or either that for any market correction. I know this week has been a market correction. If you ask me, it's going to be short-lived. Okay, if let's say US keep printing, keep increase the printing, then I'll be worried because that means something bad's going to happen. So when US do this, in fact, I see it positively. Also, I think any negative impact is actually going to be short-lived. After that, market will bounce back. Also, of course, eventually, yes, the interest rate will go up, as I mentioned. But I think my answer will be the same as previous. If interest rate go up, that means economy get better. The rental can also go up. So in that sense, I'm not so worried for REITs on a long-term perspective.
Okay, yeah, thank you. Another is, with the present uncertainty on economy recovery, is it good to invest in Manulife US REITs or Prime US REITs if we have spare USD? Okay,
so for REITs, like I said, first place you have to see yourself, you're a property player. You must understand that you're a property player. So I'm quite sure this is a very common lingo. So buy property, what are the 3 main things to look at property? Location. Probably you all have heard this before. So in that sense, if you actually want to buy all these US REITs, please, you have to dive down to the property level. Okay, to be very frank, I am not very familiar with the US office market, but I do know that it's fragmented. That means there are certain areas the office demand is actually very good. So what I understand now here is this, like for example, I actually did with a report like, Silicon Valley, a lot of offices are actually going to move to places like Texas. So the Texas may be, the Austin, Texas may be the latest Silicon Valley. So in that sense, for area like this, you can see a lot of potential growth and probably more interesting. So it really depends on where are the properties. To be very frank, like the areas that these two REITs is invested in, okay, I don't really have the overview picture. Okay, but then having said that, if you actually see the way I invest, okay, I'm actually buying every month. Okay, so end of the day, I will have a REITs portfolio. I believe now I have about 15 to 20 REITs, different REITs in my portfolio bought at different times. So based on how I invest, it's good to have some REITs with very different property types. Okay, so yes, Manulife and Prime is also part of my portfolio. Okay, I do add them now and then, but in terms of taking large position, then you must be very sure on that particular property.
Yeah. Okay. So another question is, when the property appreciate in value, does our REITs increase in value as well?
Okay, very likely yes. Yeah, very likely yes. Okay, but usually is how it works here is this. Usually your rental increase, then that's why your property value increase. And because your rental increase, your dividend yield increase. And because dividend yield increase, the price increase. So I would say that it's because more of the rental increase, dividend yield increase, then the price increase, rather than the property value. Because you understand that for REITs, they have no intention to sell the property. Or either that based on registration, it's very hard for them to sell. So a lot of investors, and don't forget, most of the investors that buy REITs, they're actually institutional investors. Okay, so like Singapore market, easily 70% of the investors are institutional. So a lot of them, when they buy, okay, their main objective is like myself to actually collect a dividend. So to them, the dividend is the key focus. So they will actually look at dividend more than the value itself. But to answer a question directly, yes, everything is interrelated. Property value increase, price will increase because property value increase is likely due to increased rental.
Yeah, since we are talking a lot on dividend, so there's a question asking, is dividend in REITs taxable?
Okay, so basically, if let's say you are buying as an individual, so use your individual name and buy, okay, not taxable, no income tax. Okay, regardless of whether you're Singapore foreigners, no income tax. If you are buying using an individual name, if you're buying a corporate, yes. Okay, but then of course, in terms of, eventually, if let's say the money were to leave Singapore, there may be certain withholding tax. So that part, I can't advise really. It really depends on how the investment is being structured. But based on the dividend, okay, to the individual in Singapore, so even you're a foreigner, okay, buying, but the money still in Singapore, okay, there's no income tax.
Okay. So based on your experience, which financial parameters of a REIT stock that help to forecast earnings and increase dividends growth?
Okay. Okay, so personally, I look at a lot of economic data. Okay, end of the day, like I said, I'm an FA. I look at more of fundamentals. Like for example, office, I tend to look more at like the GDP as I seen just now, and the overall demand. Okay, so I actually do use all this macro data to forecast rather than the individual one. Okay, that is what I do. Okay, like for example, I think I did mention I'm actually quite bullish on office because the Chinese tech companies are coming in. So this is more of the kind of research I do, like the overall market data rather than the individual one. Very applicable for Singapore because Singapore is so small. Basically, if let's say, a Chinese let's say a Chinese start coming in, very likely, no matter what, whichever REIT you are in Singapore, you get still over lah. Yeah, so it's more of that perspective. Yeah.
Yeah, okay. Last question, I think. So what's the advantage of Singapore data center compared to its peer like Malaysia, Indonesia? Yeah.
Okay, so by the way, a lot of data center REITs, they don't only have property in Singapore. Like the Tapering DC one, they have in Singapore, in Australia. I can't remember if they have in US, but just now you saw the Mapletree one, they actually have in US. So for the data center REIT, because end of the day, as I mentioned just now, a lot of data center, they also use it for disaster recovery center. Okay, so which means to say it actually makes sense for them to also diversify into different countries. So in terms of disaster recovery, let's say the company can afford, they actually want to put, like, let's say, for example, I'm Singapore, I want to put my server also in Malaysia, or my server in Australia, or whatever. So in that sense, I wouldn't say that whether Singapore data center is better than Malaysia or Malaysia is better. No, you actually need both, or you need different country to complement the whole data center game. Or put it this way, So let's say, for example, you're in the business of data center. You tell me that you only have data center in Singapore versus another company have data center in Singapore, Malaysia, Australia. I'll prefer that one, because I can diversify, So it's a complement, so I don't think you can really compare this way. Yeah.
Okay. Yeah.
Yeah.
Thank you very much.
Thanks.
Yeah. The clock is ticking.
Yeah.
So for all audience, we will email the webinar recording session, and we will send out the Q&A in our email as well for any further Q&A questions. Okay, so if you have any other questions, you can also contact us on our Facebook page, Instagram, or i3 Messenger. And once again, thank you, Mr. Chua, and thank you everyone for participating in this webinar and making it a successful one.
Okay, thank you so much. Thank you so much, Grace, and thank you so much, MQtrader, for giving me this opportunity. Okay, thank you so much, everybody. Okay, bye-bye.
Okay, yeah, thank you.
Okay, bye-bye.
Bye-bye. We hope everyone have a fruitful weekend and stay safe. See you all in our next session.
Thanks for watching.